Again, I'm Jerry Aliberti, owner of Pro-Accel. Today I have a guest, Patrick Shurney, owner of 3P Consultant. Patrick is a business finance coach for small to mid-sized contractors. I figured it would be the perfect guest for today's video because I typically help contractors on the operations side to increase and to develop a better financial system on the operations side, and Patrick helps on the accounting side. So Patrick, thanks for coming on.
Yeah,
Um,
it's good to be with you. I think that's a perfect segue because, and I'll introduce myself in a second, but I always say that contractors prefer to be in the field, not the office in general. And they don't really like the things in the office, whether it's HR or all this other kind of stuff. And on the finance side, that's where I help them. So I think we're a good complement for each other.
yeah, no, absolutely, absolutely. Hence the reason why you're on the video, right? So
Yep.
Pat, let's get right into it. What are some of the common mistakes and issues you see growing contractors have on the accounting side of the construction business?
Yeah. In your business, it's often acceptable that people are apprentices, right? And they learn a trade and have someone teach them. But when it comes to the finance, they're sort of self-taught, and I'm not saying certain tradespeople aren't self-taught, but in finance, people are often self-taught. And that comes with some challenges because maybe you just don't learn the right way. I always tell people, like, you give a contractor a hammer and you give me a hammer, you're going to get a way different result from a contractor. You're going to be a lot happier. But you give me a calculator and you give a contractor a calculator, you're just going to get a different result. So I'll say this too, and then you can dive in deeper, but it's really getting timely and accurate financial data. And I found it just comes down to the bookkeeper. The bookkeeper is usually the owner operator, a close relative, an overworked office manager, but none of them are professionally trained bookkeepers. So guess what? They're not getting timely and accurate data to make good financial decisions. And so when they fix that by getting the financial bookkeeper, it's like a flywheel, a domino effect. Other things begin to happen, which we can get into it. But I think those are the two things I see most.
And absolutely, it's especially the startup stage. I mean, all you need is your part-time accountant just to get going with QuickBooks, right? But at some point, you start to grow out of your QuickBooks phase, right? And especially
Very
when you're
quickly.
in the union world and you're dealing with union contractors and you're dealing with fringe benefits and things of that nature, it becomes a lot more complicated. I mean, what would you say is the point where somebody needs to get out of QuickBooks and then start developing their accounting
Yeah, I think
for
that, like,
scale?
being a finance person, I'm not a bookkeeper, I'm not an accountant, but just being in finance, I started with QuickBooks the day I started my business, like
Yeah.
pre-revenue. And getting all that kind of stuff set up, have a bookkeeper set it up for you so you don't fumble around with it. And, most people can run their business on a spreadsheet for a little while, but I'm amazed at how big some companies are running things on a spreadsheet. So really get into an accounting system early. And, QuickBooks can take businesses pretty far, but once you have, like, maybe they get over 20 million, they start thinking about some more like industry specific software and things like that. There's a lot of specifics out there, but I think when you're just getting started, and I know you posted some videos about like the first two phases, I think if people go and watch those videos and those first two phases, just keep it simple with the accounting system.
Absolutely. I know you mentioned that a lot of contractors don't have timely and accurate data to make informed decisions. Now, are you talking about, part of what I do is I help contractors on the estimating side and the project management side where they track costs, right? So you come up with a budgeted cost, which is your estimate. Then you do a proper project kickoff to get all that information out to the field. The field tracks the cost. Is that the data you're talking about, or is there something else that you're referencing to?
So let's say that you work with a client and they're great at that data. What I'm talking about is once it gets into their financial accounting system, that's the system that they end up paying taxes with. And if they're getting surprise tax bills or they're not making the profit they think, and they're holding up the reports that you're helping them with, but they're disconnected from their accounting reports, they're like, what's the deal? Like, I thought we priced the job right. I thought we had the right margins. And like, why didn't it come through on the P&L? Why did my P&L said I made $250,000, but I never even took a paycheck? Like, so there's a huge disconnect. And so what I do is I try to take what's their industry reports, whether, for contractors and a WIP report and backlog and the estimating, all those things. And I'm saying, let's make sure that it's getting captured in the accounting system, because if it's not there correctly, you end up paying more in taxes or having a surprise tax bill or not making the money that you can make. And so that's where a lot of the disconnect is. They might have great field reports, right? But that's where it happens in my experience.
Yeah, no, that's great information. And again, a lot of contractors are owner operators, or they were a great PM or a great estimator. They started their own construction company, and of course, the first couple of years you're wearing multiple hats, and they're trying to figure out the accounting side of stuff as well. And a lot of them fail at that. I mean, I was talking to a contractor who was pretty much relying on GCs to figure out how much money he should be getting billed, and it's like you can't rely on the GC. You got to have your books in order. Um, you mentioned on several other conversations that we had as well that fast-growing businesses consume a lot of cash, obviously, right? So you're in the startup stage, cash flow is low, you're trying to figure everything out, you're building your reputation, you're not spending your profits on a nice house or a nice car at that point. You're reinvesting it within the organization. What are some and then from there you kind of get a little bit stable, and then from there you're either going to continue to grow a couple percent a year to stay in front of inflation, or you're going to decide that's it. I'm at 5 million, I'm at 10 million. I want to be a $50 million a year company. Now you're in this massive growth stage, right? Now you need more cash. You start borrowing more money at that point. So what are some tips you can give me, and for contractors, for what's the difference between profit and cash flow, first of all? And what are some tips contractors need to keep in mind to keep their cash flow in order while they're going through these stages in the business?
So to answer the last question first, so profit is on a P&L. It's an accounting statement built for accountants. Business owners care about cash flow. Cash flow is how much money is available to run my business and what's left over for me as a distribution or salary. So it's cash flow, cash flow, cash flow. I will tell you, I spent 30 years in banking, and I worked with so many contractors before starting my own business 4 years ago. It was very common. We would say in banking, if you're a contractor, and contractors can resonate with this, when you get started, all you need is a pickup truck and a ladder or whatever, if you're a painter or whatever, and you can get started with pretty low barrier to entry. And there's a badge of honor. Some people are like, I started with nothing, and they're underfunded, undercapitalized from the beginning. And so what happens is they start leaning too much on credit cards or bank lines of credit. And because of bank line of credit, you can just write a check for something, and it might be another vehicle. And you're like, man, you probably should have financed that thing over 5 years because you just use like all your cash flow to do that. And so a lot of times they'll mismatch their cash flow. And what's really particular about the construction trade industry is how long it takes to get paid. And so what happens is you do a job, and hopefully you priced it right, and they're working with someone like you to kind of like make sure like the money's flowing to the cash flow job. But they get in this hamster wheel of performing the work, waiting 45 or 60 days to get paid. Meanwhile, they're making weekly or biweekly payroll. And so on paper it can show profit, but in real world there's no cash flow. That happens a lot. And that's a symptom. There's a prescription for that, but that's pretty common.
Right. And the net 30 days is a major issue for a lot of contractors, especially subcontractors, right? So as they're growing, that net 30, I've heard many stories of it being more like net 60 and sometimes even net 90, right? You got any tips
for retainage? When you count, and especially if all your profits in retainage, oh my God.
Right, and retainage for a lot of agencies or owners is 10%, and you don't get paid that 10% until the GC gets paid the 10%, which is the end of the job. So if you're a subcontractor and your scope of work is done in the middle of that job, you may have to wait quite a bit of while to get that retainage. So what are some tips you may have for contractors who, one, have to give up that 10% retainage, and two, who are consistently dealing with contractors who are not keeping up with the net 30-day terms and are always pushing it to net 60 plus?
If you're a growing business, what I would love for contractors to do is look at their balance sheet. And most contractors, I had a guy, he did over 50 million in revenue. He would hand me his P&L. He's pretty good at understanding the P&L. And I'm like, I need your balance sheet. He goes, well, I never look at it. Well, there's a section on the balance sheet called equity. And without getting too like technical and nerdy about the whole thing, if that's a negative number, that's probably the number you need in your head that you probably knew that you need for some cash flow relief. And so oftentimes if you're underfunded, that's as bad as anything else. Like businesses can go bankrupt when they're profitable because they run out of cash. And so in a growing business, oftentimes it is a matter of being able to fund these jobs, and they try to grow their way out of it. Oh, I'm at 5 million. Well, once I get to 10 million, this won't be a problem. Jerry, you probably work with pretty large companies that have cash flow problems. It doesn't go away with growth. Actually, growth will eat more of your cash if you don't instill some things. So I always say, look at the equity section of your balance sheet. And I'm not going to get into debt to equity ratios and stuff like that and bore your audience, but if it's negative, that's a sign that you need some cash in your business. And where do you get that? Friends, family, some investors, banks. There's lots of places you can rely on vendors and things like that for only so long, but really getting well capitalized, especially when there's a downturn in the economy. Like I remember you were around in 08, what happened? Undercapitalized businesses were the first to crater, first ones.
Right. No, absolutely. Another topic that I hear a lot about as well, and I know you've mentioned is, a lot of contractors don't pay themselves, right? They don't understand how to pay themselves. So, can you dive into that a little bit more?
Yeah, here's a couple of statistics. 51% of business owners, it's not only construction trade, this is general, will forego a paycheck for multiple months just to make cash flow. And it's sort of like the captain goes down with the ship, there's like a badge of honor, like, all my people are getting paid, but they're not. Or nearly half of American business owners are making up less than 100 grand. I know you're up in the New York area. 100 grand does just not get you very far to support a family. And that's like that in major metropolitan cities all across the country. Yeah. So this is a real problem. And so they're the least or the last to get paid in their business. And it's really frustrating. And it's not uncommon for construction trade contractors to build themselves a prison instead of a business. And they could make more money privately than they could in their own business without all the headaches, right? And so, my job is to kind of like get them out of that, mindset. And it might take 6, 12, 18 months, but they plan to be in business in 18 months. So just, start sooner than later, to get out of that. But that's the symptom. Like, why am I kind of like the last one here to get paid? And if you could make more in the private sector or working for someone else than you can in your own business, I'm not saying go do that. I'm just saying let's fix that. But it's a very common thing because business owners will just push themselves aside and they won't give themselves a salary. And I'll close with this, because their accountant says, well, the money flows through to you personally and you get taxed there, and they run their business to reduce taxes. I say, put yourself on salary and then pay yourself a quarterly distribution and then read the book Profit First. And that's going to help you a lot.
Yeah, and absolutely. It's amazing how much information is out there and how many resources, like, for example, people like us where, we're not always to pick up the phone and just have a general conversation. You can get a lot of information within the first 30 minutes or 45 minutes of a conversation. All of us are not always looking to make a sale every single call. We're looking to establish relationships and establish trust. We're looking to help you kind of grab maybe some low-hanging fruit, right? So take advantage of the resources that are out there these days. Contractors will go years and years before they start figuring out something that they could have figured out within a 20-minute call, right?
When I was in banking, I used to say this, and now that I'm a self-employed entrepreneur, it's true for me too. Business owners are so strong-willed and sometimes hard-headed that they're their own worst enemies, but they're the very thing that drive our economy. Yeah. And so I'm like that too now, and I see that. And so it is hard to raise your hand, right, and say, I need help. Because anybody can watch a YouTube video. I could watch a YouTube video on how to build a deck, or I could do it with a buddy, or I could just pay someone to do it. Contractors are done for you. You guys are going to do it for somebody. But then sometimes in your business, you can delegate your accounting and all that stuff to other people, but you as the business owner, you got to learn how to fish too. And there's certain things that, you just can't delegate to your accounting staff that you want to know. And when you know those things, it's back to my hammer example. You're just better on the business side. And even if you're cash flowing really well, sometimes they're like, well, why bother? And you're like, it's like physical health. You want to be healthy or like really live a long, healthy life, Right.
And what contractors also don't understand sometimes is that you can have positive cash flow, you could have positive profit, negative cash flow. So you
All the
may
time.
have a certain amount of invoices out that are reflected in your P&L statement that's showing that you have this profit, but you haven't gotten paid those invoices yet, which shows negative cash flow as well. So understanding the difference between cash flow, or maybe you could talk about it right now. What is the difference between cash flow and profit, and
Yeah.
how can it be negative and positive, and vice
So
versa?
a lot of contractors, Jerry, what they'll do is they'll get bank lines of credit. And if they have bonded jobs, it gets a little complicated, but basically they'll use a bank line of credit. And what I would find is I'd have two types of those clients. I'd have those that were highly leveraged and those that were not highly leveraged, but they all sort of used a line of credit to make up the difference in the cash flow timing, right? And so sometimes that's really reasonable. If you've got it's usually 10%. If you've got a $10 million business, you probably have $1 million in AR at any given time. And so that's money locked up in your business, like that you know you're going to get. So you get a line of credit, you can borrow against that. That's really helpful. But you need to have some equity that you're building up in your business. And so that creates more cash flow for you, right? Do you sleep better at night when you have $1,000 in your checking account and you've got a $10,000 payroll coming, or when you have $50,000 in checking and you've got a $10,000 payroll coming? So that's where cash flow is really critical to fund some of that money back into your business. And it really doesn't just happen by going through the journey. Like it's like you develop a forecast, just like you develop a jobs, well, I don't want to use your terms because you're an expert in those things, but when you do an estimating takeoff, like, you're really kind of planning the job out, right? But we don't really plan out the financials. We just sort of like hope it works out, and that everything is going to come through. And so I work with my clients to build out a forecast so it's funny, when you build a forecast, you end up getting pretty close to those numbers. When you don't get one, you just people say, well, I hope I have a good year.
Right. Well,
Hope
I mean,
is not a strategy, right?
especially with larger contractors or any size contract. I mean, you really need to understand how the cash is going to flow for each and every particular project. You should put together a simple schedule where the first couple of months you're probably going to be in negative numbers, especially if you're working with someone who's not going to be able to give you the mobilization funding that you want for that particular project. So you need to put together a cash flow chart to understand how many months you're projecting to be in negative cash flow before your pay requisitions kind of crisscross over your cash flow, and now you're in positive cash flow. It's going to help you with any kind of financial decision, and plus your accountant's going to be looking for it as well. I know when I was working for a major construction company, that was part of every one of our estimates. We needed to understand if we needed to borrow money. And if you borrow money, you got to pay interest on that money, right? So you need to work that into your overhead as well. And that's another thing too, is that there's quite a bit of lenders out there who lend money to subcontractors. Do you understand that you need to borrow money for a particular project to fund that project? That's where establishing a cash flow schedule comes in. And then you need to understand how much interest you got to pay and work that interest into your overhead, or else it's going to come out of your bottom line.
Yeah, and rates went up, and you mentioned mobilization funding, which is, of course, our friend Scott's business, which is really helpful because they're experts at that. I will say this to your business owners, the construction trade contractors, because I found this to be really important. They're going to tell you what their gross profit margin is on a job, right? They're going to be able to look at that. I want them to compare that to what's on their profit and loss statement, and then see if there's a difference. And typically there is. So I just give a quick example of that. It wasn't a construction trade contractor, but he swore to me his gross profit margins were 40%. And I said, how do you know? And he was waving some internal report to me, right? And he's like, on this report. Now I had his P&L, and the P&L said 23%.
Oh, wow.
And I was like, and so he's like, well, and he never really looks at his P&L that way. He just looks at like how the numbers are coming in, not the percentages or ratios. And so he calls accounting and they make a couple of adjustments, and now it's 25%, but it's way off from the 40. And so the reality check for the trade contractor is take your gross profit margins, take last year's because it's ancient history now. What did your report say? And then what did your P&L say? And if there's a gap, it's time to get working to figure out what that is, because the P&L, like I said, is what pays taxes, where your surprises are, and how much you get paid. And so connecting what you're doing with the financial side of it, man, it'll radically change someone's business. They'll go from being marginally profitable to, well on their way to fund their own growth.
Great.